Cathie Wood is making bold moves again, and this time the message is loud and clear. Fear the noise but follow the signal. While most investors panic amid rising rates and market volatility, Wood is repositioning ARK Invest for the next wave of innovation. The question is, where is she putting her money now? In recent trading sessions, ARK Invest has aggressively trimmed some of its most talked about positions: Palantir, CrowdStrike, Cloudflare, and even Coinbase. At first glance, this might look like a retreat, but in reality, it's a calculated repositioning, reflecting ARK's razor-sharp focus on true innovation. Instead of abandoning tech, Wood is doubling down on the right kind of tech, specifically under-the-radar AI plays that signal her evolving thesis. AI infrastructure and next-gen platforms are just beginning their exponential growth. This is a masterclass in portfolio management. Sell the crowded trades, reload into asymmetrical upside. In this video, we'll dive into the 3 AI stocks Cathie Wood is buying now. Names you might not be watching closely, but you should be. Cathie Wood's approach is not about reacting to short-term noise. She's repeatedly warned that Wall Street is short-sighted in moments like this, emphasizing that true innovation compounds silently while fear dominates headlines. While many investors chase speculative names, Wood is backing the essential infrastructure enabling the entire digital revolution. Her recent trades are a clear pivot toward AI infrastructure and semiconductor leaders, companies that are the backbone of the AI age. First on the list is Taiwan Semiconductor Manufacturing Company, TSMC, ticker TSM. After years on the sidelines, ARK Invest reinitiated a massive position in May 2025, snapping up over $23 million worth of TSM shares in a single day, and kept buying in the days that followed. Why? TSMC isn't just another chip maker. It's the cornerstone of the global semiconductor supply chain, and arguably the most critical company in the entire AI infrastructure race. TSMC dominates the foundry market with an overwhelming 67.6% share as of Q1 2025, more than double its closest competitor Samsung, which is actually losing ground. In an industry where scale, precision, and efficiency matter, TSMC is the undisputed leader, producing chips for everyone from Apple and AMD to NVDA and Tesla. Despite fears of trade tensions and tariff disruptions, TSMC reported nearly 40% year-over-year revenue growth in May, proving its resilience. TSMC's technological edge is unmatched. Its cutting-edge 2-nanometer chip process is already achieving over 90% yields, well ahead of rivals. This puts TSMC in prime position to supply the most advanced AI accelerators the world demands. Beyond Taiwan, TSMC is rapidly expanding production in Arizona, aligning with U.S. reshoring efforts and deepening ties with policymakers. As Intel continues to struggle in its foundry comeback, some analysts speculate TSMC could even absorb parts of Intel's chip business. Cathie's aggressive re-entry into TSMC signals a deeper conviction that semiconductors are the new oil in the AI age. While some investors chase speculative names, she's backing the essential pick-and-shovel player, enabling the entire digital revolution. The second stock Cathie Wood is piling into is Advanced Micro Devices, AMD, ticker AMD. Since late April, ARK Invest has been on a buying spree, scooping up millions worth of AMD shares across multiple trades. It's easy to see why. AMD isn't just chasing the AI opportunity. It's building a diversified, high-growth platform to challenge NVIDIA's dominance head-on. While NVIDIA still owns the lion's share of the AI GPU market, AMD is rapidly closing the gap with its upcoming Instinct MI 350 and MI 400 series chips. These accelerators are designed for AI workloads, particularly those needed for training large language models like those powering ChatGPT. In fact, AMD recently announced that OpenAI is now an early design partner, giving AMD a strategic edge in shaping the future of AI silicon. But AMD isn't stopping at chips, it's going full stack. With its Helios-branded AI server racks and the acquisition of ZT Systems, AMD is now offering integrated AI infrastructure solutions, bringing both hardware and emerging software platforms together. That means AMD is positioning itself not just as a chip supplier, but as a one-stop shop for AI data centers. AMD's data center revenues already surged 57% year-over-year in Q1 2025, and that's before the big ramp-up of MI 350 shipments later this year. As of now, Data centers contribute about half of AMD's revenue, compared to NVIDIA's nearly 90%, which shows just how much room there is for growth. Cathie's persistent buying indicates strong conviction that AMD is still underestimated by Wall Street. Despite the run-up in price since April, the stock's valuation remains modest compared to its long-term potential. The third stock Cathie Wood is charging into is NVDA. After months on the sidelines, ARK Invest made a decisive move in April 2025, re-entering NVIDIA with over $14 million in fresh capital, and has kept buying aggressively ever since. This isn't just a return to an old favorite, it's a renewed conviction in the backbone of AI compute. Despite headlines warning about US export restrictions on NVIDIA's H20 chips to China, Wood clearly sees the bigger picture. NVIDIA's exposure to China has steadily declined, now making up just over 13% of its total revenue, down from 26% 2 years ago. Meanwhile, US-based cloud giants like Microsoft, Amazon, Meta, and Alphabet are ramping up investments in AI infrastructure, and NVIDIA is right in the center of it all. Even with the loss of billions in Chinese H20 sales, demand for NVIDIA's new Blackwell GPUs has reached record levels. Reports confirm that Blackwell chips are sold out for at least the next 12 months. TSMC's advanced CoWoS packaging, critical for pairing NVIDIA's chips with high-bandwidth memory, is booked solid for 2 years. Simply put, demand is overwhelming, and NVIDIA can now redirect capacity from lower-margin China-compliant chips to high-margin global orders. But the story doesn't stop at hardware. NVIDIA's CUDA ecosystem and AI software platforms like NeMo provide a deep moat that competitors, even those in China, can't replicate. That software edge is helping NVIDIA secure long-term recurring revenue streams while defending market share. The international growth story is just as impressive. Projects in Saudi Arabia and the UAE plan to deploy over 400,000 Blackwell GPUs, representing more than $14 billion in revenue potential. These global deals, combined with NVIDIA's dominance in the US, are setting the stage for a massive expansion beyond borders. Cathie's repeated buy signal shows she believes NVIDIA's current volatility is a distraction from an unstoppable long-term trend. NVIDIA isn't just weathering geopolitical pressure, it's thriving in spite of it. With unmatched demand, a dominant ecosystem, and record-breaking chip orders, NVIDIA remains the undisputed king of AI infrastructure. Cathie Wood's latest moves are a clear signal. The AI infrastructure race is just getting started. While many investors are distracted by short-term volatility, Wood is positioning ARK for the next decade of growth. The stakes are high. These are the companies that will power the digital future. If you found this analysis helpful, let us know in the comments which AI stock excites you most. Don't forget to subscribe and hit the notification bell for more insights into market trends and portfolio strategy. Stay ahead of the curve, follow the signal, not the noise.